Labor's back in power, and with interest rate cuts expected and generous buyer incentives in place, Australia's housing market could be on the move again. But how does this all balance with falling migration and fewer international students? Let's break down what it means for buyers, investors, and renters in 2025. First, interest rates expected to ease. After a tough few years of rising interest rates, economists now predict the RBA will begin cutting the cash rate from May 2025, possibly easing mortgage pressure and unlocking demand from sidelined buyers. Lower borrowing costs could fuel renewed activity in the housing market, especially for first home buyers and upgraders. Second, Labor's housing policies, incentives, and supply. Labor is also rolling out a suite of housing support measures that make buying more accessible. Help to Buy scheme. Government co-purchase up to 40% of a new home, as little as 2% deposit, 10,000 spots per year. First home guarantee and regional guarantees. Buy with just 5% deposit and no lender's mortgage insurance. Expanded property price caps in regional areas. Building Construction Housing Australia Future Fund. $10 billion aimed at building 30,000 new social and affordable homes. Handshake National Housing Accord aims to deliver 1.2 million new homes by 2029, easing future supply issues. These policies are expected to drive more renters into homeownership, especially younger Australians and regional buyers, creating a short-term demand spike. 3. Migration and international students. Less pressure, more balance. There's also a cooling effect in the background. Labor is reducing net overseas migration and international student intake. This means less pressure on rental markets in inner-city suburbs and university precincts, more breathing room for tenants after years of extreme rental shortages. However, this shift is not expected to majorly impact the buying market, especially in suburban and family housing segments. It will help rebalance the rental market, but buyers driven by low rates and incentives will remain active. 4. What it all means for prices and demand. So, what happens next? In the short term, expect price growth across many markets as interest rates fall and incentives kick in. More renters may choose to buy, increasing competition, especially under $750,000. The rental market will begin to ease, particularly in inner-city and student-heavy zones. But looking longer term, new housing supply from Labor's Accord and Housing Fund will moderate price growth. Stabilizing migration and international student numbers will keep demand steady, but not surging. 5. State-by-state breakdown. In New South Wales, inner-city rent pressures ease, but outer metro suburbs see strong buyer demand. Victoria, more affordable entry prices and incentives attract first-home buyers. Queensland, still a hotspot, especially with internal migration. Supply constraints may drive prices higher. Western Australia, still undervalued. First-home schemes and low rates may drive sharp gains. South Australia, stable with modest price growth. Strong value play. Others, more sensitive to public sector changes and regional migration. Watch these closely. 6. What should buyers, sellers, and renters do? Here's how you can play it smart in 2025. Buyers, take advantage of falling rates and government schemes. Lock in good value early in growth corridors. Sellers, expect rising demand through late 2025, especially in areas with limited supply. Renters, relief is coming. If you're stable, you may finally see vacancies increase and prices stabilize. Investors, shift focus from student-heavy rentals to family homes and suburban stock. Labor's re-election, rate cuts, and incentive policies are combining to reheat the housing market, especially for buyers. Yes, lower migration may take pressure off rentals, but that's unlikely to stop price momentum in the short run. Expect a busy year ahead, but also a more balanced, supply-rich market in the years to come. Thanks for tuning in. Drop a comment below with your housing plans in 2025, and don't forget to like, subscribe, and share for the latest Australian property insights. See you next time!